Hello, this is the Chart Profit video. Actually approaching the open on Friday 25th of November. This is from the pre-open today. This is the E-mini S&P, just a quick recap. This is from the pre-open Thursday 10th of November. Mentioned at that point, the 6-month point of control had migrated to 59.50, which is this level here. Said in those comments that the current distribution began in June. 21.59.15 is a logical price for the point of control to emerge. As the distribution completes, that suggests a new distribution was about, a directional move was about to begin. All this here. And so price relative to 29.59.50 is extremely important. Best outcome and a big positive would be significant buying green printed above that point of control. We had that here on Tuesday the 15th. We've now had 7 value areas printed above that, and as long as the E-mini holds that level, it's in a strong price location. You can see here that the breadth numbers have improved, all the major numbers here above 50, which is considered supportive. Breadth chart looks like this through Wednesday. Percentage stocks in the New York list are greater than their 50-day moving average at the bottom here, above 50, that's good. Net new highs 25 indicator, 5-day moving average. It's the black line here above 0. That's good. That gives us the green bar here, or the green line here on the New York daily breadth indications on the pulse chart, indicating that breadth is supportive. Price momentum came through earlier in the month, as we know. So price momentum and breadth currently green. And we're seeing at the top here, Spider found support in the region of the major time support, and we saw significant buying on the profile. That's the green here marked above that support once and then twice and now 3 times. No significant selling since this day here. So this looks much healthier on the pulse chart here than it did back earlier in the month when we had this red here. Tuesday this week, my version of the Ridex assets ratio was up at 7.35, which was getting a little high relative to its recent high, which is 7.9 back on August the 26th. Then it fell back on Wednesday to 6.51. Just have a look at the chart, it looks like this. So this dotted line here that we're looking at, 7.9 is the highest level since very early in the year over here. That's a level to be watched. If we see the ratio printing above that level, would indicate possibly some over-enthusiasm from the retail investor that might cause a problem. As I said, we set back a little bit, 6.5. If the S&P pushes on, that may happen. You can see the market correct from there. Last time we were up this high, if we get there at 7.9, it was close to the peak here before the correction across September, October. Bear fund assets, we're looking at bull fund assets here, but bear fund assets were up. Ratio came off a little bit, but you can see the bull fund assets a little worrying. This point here was the highest level of bull fund assets that I follow from Ridex since way back right early in the year, back over here. So if we see bull fund assets increase again, they still remain high relative to that level. Again, that could be a point where the market might want to set back a little bit at least. Looking here in the sentiment indicators at the public poll from AAII, they tell us this week that the bulls percentage is higher at 49.9%. That is the highest bulls percentage since January 2015 over here. And that is up from just 23.6% just 3 weeks ago. So a rapid increase in bullish sentiment, possibly not surprisingly, as the last 3 weeks have been up pretty swiftly. The net bulls minus bears at 27.8, that's the highest since February 2015. And if we look at the 4-week moving average of that, this black line here, this point is the highest, again, since early 2015. If we see the black line here, the 4-week moving average exceeding that level, which is up here somewhere, that may cause a problem from a contrarian point of view. We also saw an increase in the bulls percentage in the investors' intelligence this week. That was higher at 55.9. Bears percent was lower. This indicator doesn't seem to present much of a problem currently, though, in terms of measuring maybe over-enthusiasm in the market. You can see the black line here, the 4-week moving average of the net, still relatively low compared to this recent peak where the market peaked out here. And just 2 weeks ago we had a 22-week low in that reading. So here I have the current view of the live chart, daily chart for the E-mini S&P. This is the big level to watch now, 2159.50 down here. So for longer term investors, price back below this point would indicate a problem. See no movement at all in any of the controlling price levels that I follow. So Spider equivalent level remains here, 213.84. That's the 11-month, and as we know, the major, as we saw on the pulse chart, is down here. Big outperformer is the Russell 2000 ETF IWM. Had an incredible rally since it found support on that major right here. We have a 12-month at 120.82. We're much higher than that currently, pushing out into new high ground here. So difficult to find, obviously impossible to find any levels here. What we will do for a general market overview is to look at other charts. So for instance, on the Qs we have a level 1 year point of control at 117.25, which is here. This chart, a relative underperformer. It's done quite well, but it's still relatively underperforming some of the others. And on XLK, which is the technology sector, we have an important level here, which is the 1 year at 47 dead. And so price back underneath these levels, Qs, and this one here would possibly indicate problem for the rally in the other large cap, small cap charts. Currently, as you can see, we're holding these levels. First things to look for, therefore, if the market is going to run out of steam, number one, we will see some red coming in, like here on the profile, which will be marked here on the pulse chart, and then we would likely see this indicator turning back to red and this indicator turning down. Currently all of this looks okay. Quickly look at the FTSE and the DAX European charts. This is the FTSE 100 index from the UK. We talked about this band of resistance here up to 68.54, which is the 6 month, 68.23. FTSE's been printing some time below that, in fact. Still having a problem of approaching the upper regions of that band. Price up here would be a big positive. And no movement on the DAX chart in terms of controlling prices moving, so we still have this 3 year value area high, 10.824 up here, and currently printing in a strong price location above its major half range here. Price back underneath this major half range here again would be indication of weakness and possibly helpful in determining whether in a general risk on risk off kind of environment. Want to see the DAX holding that level. Looking at the T-bond ETF TLT, we know the big major support down here, major point of control at 117.15. These can act like a bit of a magnet, so that's a little worrying. Should we see another leg down, possibly in early December, you'd really want to see that support hold, and potentially that may be interesting because a bounce off there, we'd have something to key from if we see indicators and things turning up from there, but I really don't have any close levels above the current price where we could say yes, TLT is now moving into a stronger position, unless of course we see these points of control shifting, and that would probably take some time. Commitments of traders data for the T-bonds does look a little interesting though. You can see the commercials, what we call the smart money here, heading up back in a net long position, seem to be buying this decline, where the not so smart money, small traders, heading down along with the large speculators. So this is a kind of encouraging set of commitments data. You can see here we've got a level of 100 for the commercials looking back the net position over the last 6 months, and the small traders more bearish than they've been actually in a lot longer time period than that. So this is encouraging. Just a pity we can't really find any levels here to key from, as I said, unless that point of control moves higher. This one here. Gold has also seen, as we know, a real decline over the last couple of months. Looking here at GLD, the gold ETF, has now broken below the half range here, which we were hoping for support from that level, and as of Wednesday we saw quite a decline when it broke that support. So from this important low to this high we have this level, and this is really weak price location, but at least we can say if GLD can get back above this level and print some time, puts it back in a stronger price location. Currently a really weak looking chart. Gold commitments data not as clear as the T-bonds, but you do see the commercials just pushing out to a new high here in terms of net position on the commercials, looking quite bullish. You really want to see GLD back above 116 and printing time. Crude oil futures indicate a lower open today for this chart, United States Oil Fund, USO. Over the last few days we've seen it get back above its halfway point off this low, and we've now reached this resistance here, which is the real major point of control at 1078, and you can see that's clearly resistance. Price back above here would be a bullish indication. We have a lower open today in the short term. So again, I definitely want to see that kind of price action before looking at the long side for new longs for this chart. Interesting level. I called this a key chart purely because of this and where this chart is in relation to this level. So I think key chart, key level. If we see USO printing back underneath the half range, that would be a bearish indication and not very helpful for equities, I think. Dollar index. Out new multi-year highs, just off a little bit today. Euro FX chart, as you'd expect, up a little today, but almost a mirror image of the dollar index with this rapid decline through November. We had this brief spike above the major 4-year at 111.65. Well, through this period here, we were talking about weak price location being below that level. Said not to look at the long side unless we saw price action up here. Right now with such a decline, again down here, would find it difficult to find any levels to key from, and personally I would need to wait for some kind of support or point of control to emerge that would give us a level to key from. And with a chart like this right now, why would you want to buy it anyway? Distributions suggest lower, if anything. British pound currently printing very close to 124.19, which is the 4-month point of control. Looking for a clear higher low above that level as the first indication of strength in the long-term chart. Price back below here, and it's very close at the moment. Immediately puts it in a weak price location. But I've never seen the chart ranging for most of November. UK still has the whole Brexit situation ahead of itself. In terms of negotiations, this could easily once again become a really volatile chart, news or comment or anything else. Okay, the E-mini attempting to push higher at this point. We're about 15 minutes after the open now. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.